What's going on, YouTube? So I'm out here in the Palisades right now, and I'm at this little park area. Just behind me is the Pacific Ocean, and off in the distance you can actually see that mobile home park that still hasn't been picked up, which is unbelievable. It's crazy. Today, I wanted to talk with you guys a little bit about the real estate market, just in general, whether it's in California or just nationally, right? And I wanted to share with you guys some of my thoughts and opinions as to what's going on within the real estate market. But before we do that, let me turn it around so I can show you guys where I'm at, and you guys can get a better look at what's going on here off of Las Casas Place and Granola Avenue. All right, that's better. Maybe you guys can get a better look. Here's a house right here. You can check it. Well, what was a house? Let's check this out. These people built a house right here. And then right down there is the mobile home park that I was talking about. That still hasn't been picked up. And I'm not sure it's gonna be picked up anytime soon. You can see all of those properties that were burned down across the canyon. Shame. So yeah, let's talk about real estate. Real estate's up in California, and it's up big. Apparently, the active listings is just as much today as it was in comparison to 2019. And you might say, well, that's not really saying much. Like, the real estate market was doing pretty good. Buenos dias. What's up, guys? Yeah, the real estate market was doing pretty good back in 2019. And that's true. But to say that there's just as many active listings today as there was in 2019 is really saying a lot. When you just look at or think about the trajectory, the upward trajectory of inventory, since we know that inventory was at historic and record lows back in 2022, right? There were no houses on the market in 2022. And this is what was fueling, these bidding wars and people overpaying asking, on top of a number of other factors like low interest rates and the government stimulating the economy and printing trillions and PPP loans and fraud and all this stuff. So when you think about the fact of the matter that there's actually more active listings on the market today than there was back in 2019, that really tells you a lot about the growth rate or the trajectory or velocity of active listings and the increased inventory. Like, how did it go from being at historic lows, to being a surplus now in California, or at least being back to what we were pre-pandemic in such a short period of time? Like, the velocity is just straight up. And there's no buyers. There's no buyers. People are not buying houses right now. Rates are just way too high. And then you couple on top of that insurance premiums going up. Rebuilding costs for a community like this is going to be going through the roof. And then think about something else. The fact of the matter is that in many major metros across the United States, you're starting to see home prices go down. Like, think about that. That's not normal. You'll hear a lot about real estate and these realtors saying, we're just going back to normal. There's nothing normal about home prices going down. Like, that doesn't happen very often. And when it does happen, usually something catastrophic follows it. Like, home prices don't go down. They just go up, historically speaking. But if I were to say year over year, home prices in Austin, Texas are down. Miami, it's down. Tampa, it's down. San Francisco, home prices in San Francisco are down 3.4%. That's unbelievable, year over year. Phoenix, Arizona, down 3.5%. Denver, Colorado, down 2.7%. San Diego, 2.4% year over year price declines. Sacramento, 1.8% price declines. Los Angeles, year over year down. Not very much, but still down. Los Angeles is down 0.4%. San Jose, 0.9%. Riverside, California, down 1.5%. Like, that doesn't seem like a lot. But when you think about how rare it is for home prices in general to go down, that's saying a lot. Because it doesn't happen. It just doesn't happen. Home prices, for the most part, never really go down. Year over year, anyways. You know, so think about that for a second. But this is happening at a time when we're not even in a recession. Like, what? How if the economy is doing so great and home prices are going down in let's say, I think the Zillow Home Value Index said out of the largest 300 major metros in the United States, 96 of them are experiencing year-over-year price declines. That's not normal. There's nothing about that that's normal. You know? And what do you think is going to happen to home prices in an area like this? Like the Pacific Palisades? Like, think about it. Look, I don't need to be a realtor. I don't need to be an accountant, an investor. I don't need to know anything. All of these homes, I'm literally standing here in the middle of the street, and as far as the eye can see, millions and millions, billions of dollars worth of assets just went up in flames. Like, what do you think is going to happen to the value of this home right here? And it looks like it's a fairly new home, right? It's a beautiful home. Like, God, who wouldn't want to live in that thing? You know, and obviously it was constructed very well, or it wouldn't still be up. You know, everywhere surrounding this home is just complete catastrophe. Literally everything was burned to the ground. Billions and billions of dollars worth of equity gone. There literally couldn't have been a worse time for a fire. Home prices in the Pacific Palisades had reached record highs. 2022, people were bidding up home prices in this area like you can't imagine. Every year from 2020, if you bought a $5 million house here in the Palisades, every year it went up. One year it was 5 million, next year it was 6 million, next year it was 7 million, next year it was 8 million. It just kept going up and up and up. Those days are gone. Gone. And it doesn't look like they're going to be coming back anytime soon. There's lots and land for sale in the Palisades everywhere. And there's probably a lot of people who are listing their lots for sale and they're not selling. They've been on the market for 5, 6 months now, maybe longer. I don't know. And I bet you're probably starting to see a lot of people delist their lots because they're just not selling. You know, and I think the logical explanation for that would be like, why would they list their house and it's not selling for 5 or 6 months? You know, so they pull it off the market, they delist it. Why would somebody do that? Well, the logical explanation would be because they think or are anticipating that the Federal Reserve at some point will be lowering interest rates. Which, I mean, is probably a safe assumption, considering the fact that the unemployment rate is starting to tick up slowly. I think it's very safe to assume that in the very near future, the federal funds rate will be coming down. By how much? I don't know. It's anyone's guess. If they lower rates by 25 basis points, that's not going to do anything. If they lower interest rates by hundreds of basis points, you better ask yourself why. Do they know information that you and I don't? Let's see. So this is 555 North Las Casas Avenue. You got this small house being rebuilt right over here. Yeah, and you know, the unemployment rate, historically speaking, is still pretty low. Nationally, it's what, 4.6%? Look at this house being rebuilt. That's still pretty low. I think in California, the unemployment rate is higher than that. It's about, I don't know, 5.5 to 5.6%. And it's probably going to be going up. The market in Los Angeles has cooled down substantially. The real estate market. And the real estate market plays a huge impact on the economy in California. When the real estate market in California is doing really well, the economy in California is doing really well. But right now, you've got high interest rates, 7% for a mortgage, and you've got billions of dollars worth of assets that just went up in flames in Pacific Palisades and in Altadena. And if we just sit here for a second and listen, what do you hear? I don't hear a lot of construction going on. It's basically been 7 months. So this is Las Casas Avenue and Baylor Street. How long will these lots be like this for? It's already been 7 months. What do you guys think? Do you guys think that when the Federal Reserve starts to cut interest rates, everyone's going to jump back into the housing market like Barbara Corcoran thinks? I don't think that's going to happen. And just because the Federal Reserve starts to cut interest rates, that doesn't necessarily mean that the mortgage rates will go down with it. You know, they say there's a lag effect. If the federal government cuts rates today, you won't see it show up in the economic data for at least a year and a half, maybe even longer. And if it's a 25 basis point, that's nothing. That's not going to do anything. If they start cutting interest rates by 200 basis points, then you got a problem. You got a big problem. So you got another lot for sale up here. I don't know what it's going for. Oh, it says sold, so that's good. Good for them. I wonder what it sold for. What do you think is going to happen to the value of that home right there? Think it's going up? I'll tell you, there really wasn't a worse time for this fire. Home prices have just exploded. Home price appreciation from 2019 up until really 2024. Now that we're starting to see year-over-year price declines in Los Angeles County, which isn't much, you know, home prices are only down 0.4%, but the fact that they're going down at all is not normal. So any realtor out there that says we're going back to normal, that's not normal. Home prices going down isn't normal. Doesn't happen. And if I tell you that a market like San Diego, what is it? San Diego's down year over year 2.4%. That's huge. What does that mean? 2.4%? That's basically 3% year over year price declines in San Diego. If you're an FHA buyer, if you bought a house in San Diego last year and you only put 3% down, you're underwater. You're underwater. And how long will home prices continue to decline for? Austin, Texas, down 5.8%. Miami, down 3.8%. Tampa, 5.7. San Francisco, year over year, down 3.4%. What's very odd is these markets are going to experience year over year price declines at the same time that the cost to insure properties in these areas is going to go up and go up exponentially. 7 months later, and there's still this stuff everywhere. Demand for housing in these areas, non-existent. And that's why you see people delisting. If, let's say, for example, this guy right here puts his house up for sale and it doesn't sell for 6 months. He says, oh, you know what? I'm going to delist the property and I'm going to wait for the Fed to lower interest rates, which is, logical. That would make sense. But there's an argument for the Fed to not cut rates. There really is. With these immigration raids happening in California, labor costs are going to be going up because you're going to have to pay, contractors are going to have to pay legal U.S. residents to do the work now. So they're not going to be paying illegals from Home Depot $20 an hour, whatever, and work them 10-hour shifts. They're going to have to pay and be legit now. They're going to have to be licensed, bonded, insured, and the people who are, who they really need, they're going to want healthcare, they're going to want dental, all this stuff. But before, if you weren't employing illegals or undocumented migrants, whatever, you weren't really competitive. If you had to charge higher prices, you're competing with some guy who's utilizing cheap illegal labor. Who do you think was going to rebuild these places? It's them. There's a huge population of undocumented people here in California. They are a major contributor to the economy, whether you believe it or not, in the construction industry. So here's that one house, 640 North Las Casas Avenue. They are a huge, economic growth factor in construction and in the warehouse industry, in manufacturing industry, services industry. These guys work. They work hard, they work long, and they work for cheap. So labor costs, pretty safe to assume that they're going to be going up. And who knows what's going to happen with these proposed tariffs. Nobody really knows because nothing's really happened yet, and every day it changes. But let's just assume that prices go up, like it's pretty safe to assume. Building materials in the Palisades, lumber, plywood, concrete, rebar, all of that stuff, nails, hangers, a lot of this stuff is imported from Canada, Mexico, and China. So if the cost of all of those consumer goods goes up, all of that will be incorporated in the consumer price index, leading to higher prices. Higher prices really is, one of the major tools. The CPI is a major tool that the Federal Reserve uses to determine whether or not they should raise or lower interest rates. So if prices continue to go up, then there's really no need to lower rates. Labor costs go up, there's really no need. We already know insurance premiums are going up, and at some point in time, that's going to be incorporated into the consumer price index. California just approved a 17% insurance price increase for State Farm. You think all of the other insurance companies that continue to do business within California aren't going to be reaching out to Ricardo Laura, the insurance commissioner, asking for a 17% rate increase? Of course they are. So insurance premiums will be going up, and there's no logical explanation for why they would be coming down anytime soon. I mean, there's literally fires going on right now as we speak. In Central California, there's another one up in, I don't know, they're all over the place. They're literally everywhere. Every year, these fires just get worse and worse. And apparently this was the most expensive natural disaster in American history, which makes sense because asset prices here in the Palisades were at record highs. And now literally all of that, you know, home price appreciation basically just got burned up. Your home went from 5 million to 8 million in the matter of 5 years. So $3 million gone. Yep, the bank's gonna get a check from the insurance company to cover the mortgage, but all of that equity, gone. And if you refinanced, which most people more than likely did, some people might have even pulled out second mortgages. If you pulled out a home equity line of credit, is that included in your insurance coverage? I don't think so. I think there's a good chance people are still paying on their home equity line of credit, even if your mortgage was paid off. And you know what's really sad? The other day I saw on the news, a resident in Altadena signed up for a program with a bank. I forget exactly what it was called. It was like a mortgage forbearance program. Like the guy didn't have to pay his mortgage for 90 or 120 days or something like that. And then finally, when that program had expired, they sent him a letter saying you owe 4 months worth of mortgage payments in a lump sum. And obviously he didn't have the money. So they threatened him with foreclosure proceedings. I don't know if he just didn't read the fine print, or maybe in the fine print said that, you know, I don't know, maybe it's a confusion, but just the fact that stuff like that is happening is just unbelievable. Could you imagine signing up for a mortgage forbearance program for 90 days or whatever it is, or 5 months, and then all of a sudden getting a letter in the mail saying you owe, you know, $20,000-$30,000, whatever it was, and if you don't pay it, we're going to foreclose on you, right after your home just literally burned to the ground? Jesus. Talk about a predicament. And some of these people will go into foreclosure. I mean, look at this house right here. You know, the cost of insuring this property is going to go through the roof. You know, at the same time that there's a very high likelihood that the value of this home is going down. And you're going to continue to make a mortgage payment on it? This house will be for sale pretty soon. I'm surprised it hasn't been up for sale already. But who's going to buy? There's no buyers. Rates are way too high. And even if you do have the money, it's like, who wants to live in an environment like this, where literally the entire street just burned to the ground? You know, if you've got enough money to buy this $10-20 million mansion, or whatever the hell it's worth, you know, would you really want to live in an environment like this for the next 5 to 10 years or longer? Who knows? It's been 7 months and there's dirt lots everywhere. I wouldn't. You don't need to. You make enough money to live wherever you want. So anyways, that's some of my crazy little thoughts today. All right. So this video is getting kind of long. It's about 25 minutes or so, something like that. So I think it's time to go ahead and turn this one off. So thank you. I wanted to say thank you to all of the people who have continued to support me and like and comment and subscribe and even donate money, which is wonderful. You don't ever have to do that. I really appreciate it if you do that. And if you're a new subscriber, thanks for checking out the channel. I really appreciate it. It's because of people like you who like and comment and subscribe that the channel is still continuing to grow. And for that, I'm really thankful. All right. So until next time, guys, I'll talk to you guys later.